Okay, let's go.
All right, let's talk about a high-stakes game, scalping gold, or XAUUSD as you see it on the charts. This is one of the most volatile, most challenging markets you can trade. And to even have a chance, you can't just wing it. You need a rock-solid blueprint. So let's dive right in. And this really hits the nail on the head, doesn't it? This is why people are so drawn to gold. The volatility, the speed, it means that a single well-placed trade can bring in profits way faster than most other markets. It's that potential for explosive gains that gets everyone's attention. But you know there's a flip side. Yeah, and there it is. The same fire that can forge a fortune can just as easily burn your account to the ground. This is not a place for guesswork. One bad move, one emotional decision, and you can get wiped out. That's exactly why a strict, rule-based strategy isn't just a nice-to-have. It's literally your only hope for survival. So you see, it really is a double-edged sword. Those huge price swings gold is famous for, they create all the opportunity, sure, but they also create all the danger. The whole point of the blueprint we're about to lay out is to navigate that danger by being incredibly selective about when we even think about placing a trade. And to do that, we're going to park ourselves on the 5-minute chart. Now, you might be asking, why not the 1 minute? Well, the 1-minute chart is just pure chaos. It's full of fakeouts and noise that'll chop you to pieces. The 5-minute, though, it's the sweet spot. It's fast enough to catch those quick scalping moves, but it's just slow enough to give us signals we can actually trust. Okay, before we even dream of looking at a chart, we have to talk about prep work. These are the non-negotiables. This is what separates the pros from the people who are just gambling. And believe me, with gold, you don't want to be a gambler. Listen up, because this is probably the most important thing I'm going to say. Do not, I repeat, do not trade gold with your own money if you've never done it before. The risk is just off the charts. Open a demo account. Practice this strategy over and over until you can follow every single rule without even thinking about it. Seriously. And look, you gotta understand, this isn't some magic formula you can just plug in. It's really a combination of several core trading skills. You have to already know about support and resistance, how to use moving averages, and how to spot specific candle patterns. This blueprint basically layers all those concepts on top of each other to find one very specific, very powerful trading signal. All right, with all the warnings and the homework assignments out of the way, let's finally build this thing. Let's get our charts set up with the exact tools we're going to need. Here are the specs. So we're on the 5-minute time frame, like we said. You're going to add 3 smooth moving averages, the 21, the 50, and the 200. And at the bottom of your chart, you're going to add one more indicator, the good old Relative Strength Index, or RSI. We'll be using that mainly to tell us when to get out of a trade. Now this right here is probably the most important rule of the entire system. On the left, that's what we call the no-go zone. See how the moving averages are all tangled up and flat? That's a sideways, choppy market. It's totally unpredictable. The advice here is simple, no touchy. Just stay away. But on the right, that's the go zone. The averages are fanned out, they're separated, they have a nice slope. That signals a strong, clear trend. This is the only, and I mean only, condition where we're allowed to look for a trade. Okay, we've got the right market conditions. Now for the heart of the strategy, the actual mechanics. The precise step-by-step rules for getting in and, just as importantly, getting out. The whole process really just boils down to these 4 simple steps. First, figure out which way the market is going. Second, wait for a special entry signal. Third, protect our money. And fourth, know exactly where we're going to cash out. Step 1 is our foundation. That 200 smooth moving average, that's your line in the sand. It is your North Star. If the price is above it, you are a buyer, period. You are only looking for long trades. If the price is below it, you are a seller, and you are only looking for short trades. There are no exceptions to this rule, ever. So you've got your trend. Now what? Now you wait. You're watching for a small pullback, a little breather in the market, and it looks like this. 3 small candles moving against the main trend. Then, bam, a single, big, powerful candle appears that moves with the trend and completely swallows up the previous 3. That giant candle, that's our signal. That's when we enter. The absolute instant you enter a trade, you do this next step. It's non-negotiable. You set your stop loss, and it has to be incredibly tight. For a long trade, it goes just a few ticks below the low of that big entry candle. For short, just above its high. This is what saves you from those wild, unpredictable gold swings. It makes sure that if you're wrong, the loss is tiny and you live to trade another day. All right, so you're in the trade, it's moving your way. How do you know when to get out and take the profit? Well, our main signal is something called RSI divergence. So imagine you're in a short trade. The price makes a new low, which looks awesome. But then you look down at your RSI indicator, and it's making a higher low. That mismatch, that divergence, that's a classic warning sign that the momentum is dying out. That's your cue to get out and bank your profits. But what if you don't get a nice, clean divergence signal? Well, we've got a backup rule. If the market just stops trending and starts going flat, moving sideways in a tight little box, just get out. Don't sit there hoping it'll start trending again. A sideways market is an unpredictable market. Take what you've got and walk away. So, we've gone through the setup, the entry, the exit, the whole shebang. Now let's boil it all down to the one single principle that you absolutely positively cannot forget. I love this quote because it's just so perfect. Think about it. When gold has momentum, it's like a runaway freight train. You cannot stand in front of it and hope to stop it. Your only job, your entire job, is to figure out which way that train is going and hop on for the ride. Trying to fight it is just, well, financial suicide. So let's run through it one last time, quick and dirty. Number 1, only trade with the trend defined by that 200 SMA. Number 2, wait patiently for that 3-line strike pattern. 3, use a super tight stop loss. 4, get out when you see RSI divergence or the market goes flat. And finally, if the moving averages are smashed together and sideways, you do nothing. You go for a walk. That's the blueprint. In the end, a strategy is just a set of rules on a piece of paper. Its success doesn't come from how clever the rules are, it comes from the trader's ability to follow them, day in and day out with zero deviation. The map is right here. But the real challenge, the real question, is whether you have the discipline to actually follow it. Can you?